Yo, what's up guys? How y'all doing? Today's 19th of November and I just took an A plus trade and lost 600 bucks on it. Let's jump into why I took this trade and I'll tell you how I feel afterwards. First, I want you to look at this order flow. Ever since the beginning of November, we have only been going down, right? And every time it goes down, it takes a previous liquidity level. Every time it goes down, it takes a previous liquidity level. So going into today, I also expected us to keep going down, take this liquidity level at least, and then potentially keep going down and take that level as well. But this move is too big for me, right? It's 400 points and that one is 600 points. And I need a smaller target so that I could just be in and out of the trade within 5 minutes and call it a day. So that's why I zoom into the lower time frames. I zoom into the lower time frames and apply the same logic, same order flow analysis, right? It's still going down and we're still hunting these liquidities to the right of us. But this time frame is still a little too big for me, so I jump into an even lower time frame and I apply the same logic over again. Just before 9:30 market open, we are still going down. This tells me all of the time frames are aligning. The lower time frame, 1 minute, higher time frame is also aligning, and the highest time frame is also aligning, right? Everything is going down, going down, going down. And when everything is aligning perfectly at market open, there's more chance that we start having sharp moves down instead of going up. But today it ended up going up. That's why I lost the trade. But that was overall my logic behind how I took today's trade. Now I want to get a little bit more technical on why I took this trade. From this point till this point, we can draw an equilibrium. And when we draw an equilibrium, the line ends up here, 50% line. And we go up down here and then we bounce up, hit this equilibrium, and theoretically, we should start going down again. And since that market open right here, we have a lot of liquidity that is introduced into the market. So I expected the volatility to deliver us to these sell side liquidities very fast. And another important tool you can use to make sure you see that the momentum is shifting downwards is a break of structure. And in this case, there was a break of structure over here, or a change in the state of delivery. It doesn't matter what you call it, but we have displaced below these last consecutive up close candles. We displaced below this, so this is a break in structure indicating a potential reversal in price. So now if this is reversing and we have an equilibrium hit already, which is pointing downwards, and this is also pointing downwards, and the overall order flow is also pointing downwards, everything's pointing downwards, downwards, downwards. Now I'm starting to look at some sell side liquidities, downside targets, basically, to take a trade towards. And this is the nearest sell side liquidity on this chart right now. Everything else is either too far away, like this is hundreds and 200 points away, like it's too much, right? But this is not that far away, like from the current price, it's 40 bucks away, right? So I wanted to take a quick short at market open to this level and then just step out of the markets. I don't care what it does after. It could go up, it could keep going down, I don't care. But this is on the 15-minute time frame. Now we need to jump into the lower time frame to get an even more precise entry so that we risk the least amount of money and maximize our profits. On the 1 minute, you can see the same picture again. Order flow is going down, right? So we are only going to be taking shorts. We're not going to be taking longs. And notice how close this sell side target is already. We are already like 60, 70% done with this entire move. That makes this level all the more likely to be hit. And if we zoom in towards these little candles, what we see is the same thing that we did on the 15-minute time frame. We have a break of structure again over here. What does a break of structure signify? It signifies that we are breaking structure towards the downside and we're gonna potentially keep on going lower. So now market opens on this next candle and I expect us to just completely flush down to this level. And as you can see, the kind of wicks we have on market open, it is very volatile, and 7 times out of 10, if you have everything aligned perfectly, like all of the order flows are aligning and you have break of structures on the high time frame and the lower time frame at market open, a realistically close target should be immediately hit. And that's what I was expecting today. So now the market opens and I want to take a short, but I don't see any fair value gaps to enter off of. And I don't see any SMTs to put a stop loss at. So the 1 minute chart was too big for me. That's where I jumped into the 15-second. Now this gives us a lot more information. On the 15-second, right before market open, we have this bearish displacement down that create a fair value gap. So that was my entry. So this is where I would enter short. Now I would need a SMT, and we had an SMT right here. So now everything's perfect. High time frame order flow is going down. Middle time frame order flow is also going down, and the low time frame order flow is also going down, confirmed by this break of structure and all of the bearish fair value gaps. So now just before market open, just before that volatile time period, I find a fair value gap. So I enter there, and then I find an SMT and I put my stop loss there. And all that's left to do is just target that realistic sell side liquidity that we were talking about. That's an A+ trade. That's an A+ trade. And what ended up happening was, at first, I was in a little bit of profits. I was up around $1,000 here. And then it just completely reversed on me. And I ended up losing $600, which is close to a full-size loss. But there's literally nothing I could have done better. This was a perfect setup. And even though I lost with my perfect setup today, that doesn't mean I will lose the next time. Because this is my edge in the markets. And edge in the markets means you will win more times than you lose. It doesn't mean you do not lose. So it's very important to distinguish that your edge is a winner across multiple trades, not a winner on every single trade. So if you have an edge, you cannot be discouraged from a single loss. So I'm feeling very good today that I took an A+ trade, feeling very good that I followed my rules, and I feel no emotions, no pain, because I'm actually quite happy because I've done everything that I could have done that is in my control. Me getting stopped out is beyond my control. That's in the controls of the market, not mine. So I did everything I could today, ended up losing $600, and overall feeling pretty freaking good, man. See y'all next time. Peace.